We are talking business. We are talking money during this pandemic once again with the managing director of Sun Group Wealth Partners, Winnie Sun. Winnie, thanks for being with us. Let's talk about big banks, big tech, corporate earnings. What's the latest news here? And tell us why we should care.
Well, this is actually really exciting news because the S&P 500 index is showing that positive earning growth is sort of across the board here in the fourth quarter. In fact, about 1.7%, with 58% of companies have already reported earnings. So this is very positive as we're going into deeper in 2021. There was a lot of questions of if the economy would continue to do well, the stock market would. The economy still is lagging, I should say, but the stock market is certainly, you know, phased to do very, very well this year, simply because companies are reporting, in some cases, sort of unheard of earnings, like really, really spectacular earnings. So we're seeing that as a positive movement, and certainly investors are feeling more comfortable with the names and holdings that they have.
Workers out there, does this equate to less layoffs when you have the bigger earning?
It could, but what we're also seeing right now is that we're seeing actually an increase or uptick in temporary hires. So many companies are seeing this. Well, we're seeing this as a indication that companies are doing better. They have positive balance sheets, but they're saying we're still a little skittish. We're not quite ready to go full in and do permanent hires. So we're still hoping that the unemployment numbers decrease and increase in permanent hires.
Interesting story about Kroger in the company that it looks like they may be paying their employees in the future here to actually go get the vaccine. Is this something that's got legs with other companies that they may be diving into and be willing to actually fork up money here for their employees to get vaccinated?
Yeah, Mike, I think this is a really interesting story, and I'm curious to see, how you feel about it. But certainly, I think we are seeing this already. There are talks about you can't get on a cruise ship unless you've been vaccinated. You can't get on a plane, and now companies they may not be able to say that. Just like many companies say you must have a drug test before you can work at my company. The question is, right now they're being very polite and saying we're going to give you money to get the vaccine, but will that change? Will that shift? I mean, I know like our kids are required to have vaccinations before starting school. So I'm not sure what that's going to be. I'm curious to see how it folds.
Yeah, I mean, I'm a supporter of the vaccine, so just in my own private life, I plan to get it when I am eligible to get it. So, but I'm not sure even my own company if that would be something they would think about in order to get vaccinated. And you bring up a good point about the schools as well. So over the weekend, I got something in the mail from my tax guy, and it's my planner, right? All the check boxes, do this, have that document, have this. So I started on it, I haven't finished it, but I bring this up because later this week on Friday, right? That's the day that the IRS starts accepting returns. So should we be doing these earlier this particular year, or do you think it's not going to hurt if I do it later down the line?
I love the idea of filing early, especially if you're expecting a refund, or maybe you're due a little bit more in terms of stimulus relief that you didn't get earlier. Because we know that if you can file as early as possible, the IRS says, number one, if you file early, you file electronically, and you set up direct deposit, then you could actually potentially get your refund within 3 weeks. And so that's a big deal. So if you have if your return is really simple, you can do this online. I think the IRS has a system. TurboTax certainly is an option, but like I'm with you. I have a tax planner my accountant sent me to. I don't know that I'll be early or right on time, but I'm going to try and get it done, before March.
I know one of our previous conversations asked you about me working from home. Am I going to get any deductions for it? And I don't think I will because this is not officially my office. It is a bedroom that my son sleeps in. But that prompted me to also think about teachers and whether or not teachers can actually have deductions this upcoming tax seasons because of what they're doing from home.
Yeah, this is a big one. The IRS really wants to get the word out on this one because the IRS has come up with a new thing. This is part of the CARES Act, as you know. Eligible teachers who are educators in the kindergarten through 12th grade level can actually deduct up to $250 of unreimbursed costs of COVID-19 protective items. This includes even things like air purifiers, masks, hand sanitizers, all the things that the CDC has recommended. You can actually write up to $250. So that's pretty great. That's a tax credit.
That's great. Yeah. What about 401k? That was on one of my check boxes. Did you withdraw from your 401k. And maybe even there's a lot of people out there across the country who did because they lost a job or a spouse lost a job and they needed that extra cash. Do they take a hit this year, or do they get taxed more, or maybe not on withdrawing from the 401k?
Well, a lot of people took out money from their IRA or their 401k in 2020 because of CARES Act, like just like you said. But one thing that we do know that although you don't have the 10% early withdrawal penalty because of the CARES Act, but you do have to pay taxes. Now, you do have 3 years to make this up. So, like for example, let's say you took out 50,000, I would do everything I can to sort of try and pay some of that back. Number one, it goes back to your retirement. Plus, if you pay it back, then you don't have to pay taxes on it because every dollar that you take out does count towards your ordinary income. So it's taxed as ordinary income. So you could all of a sudden have a really big year because of all that you've taken out. So you do have 3 years to make up that tax though. So do whatever you need to do. But absolutely, that's a conversation I would have with your tax accountant of whether or not you should pay a portion of your taxes this year.
Okay, great. Coming off Super Bowl weekend, the Bucks are the champions. Tom Brady, a champion once again. You got an interesting viewer question about, what is it, a third grade teacher and an engineer, and they have this tradition of going to the Super Bowl and whether or not they were wasting money, or tell me a little bit more about that.
You're going to love this question that we got in. So basically, this question was a viewer that said, my husband and I go to Super Bowl every year. We've done so for the last 20 years. We've done so in person. But I'm curious, like, how much money would that have been if we added it all up? Because, like, could it have been more? And so I did a little bit of research. And here's the thing. We found the average cost of a ticket for the past 5 Super Bowls was about $5,506. I know that's if you bought direct, right?
Right.
If you did it on resale, even more expensive. So based on that, assuming for 2 people, that's $11,012 over a term of 20 years is what the viewer said. Payment of another $11,012 every year. And I recognize that some years it probably were less, but assuming a 5% rate of return, the total end result was $393,340. So almost the cost of a house. Well, actually, that's actually more than the cost of house average out here in the United States, but that's almost $400,000.
I don't want to think about that. I mean, I've been lucky enough to go to one Super Bowl, but it's the experience. But now that I'm looking back on it, with 20 years in a row, that is a big number. Hopefully they enjoyed their Super Bowls. Hopefully their favorite team got a Super Bowl too. All right, Winnie Sun with Sun Group Wealth Partners. Always a pleasure, Winnie. Thanks for taking the time.
Thank you so much, Mike. Take care.